For more on where we go from here, how you want to be positioned, let's bring in Jeff Krumpelman, Chief Investment Strategist at Mariner Wealth Advisors and alum of the great DePaul University in Greencastle, Indiana. Great to have you. Okay, so let's talk about these worries here. 12%, you think we could be up a year from now? That you're going to have to convince me on this one. How do we get there?
Well, I don't think it's a straight shot to up 12% at all. And in fact, you know, we've been one of the few voices, John, that I think it's not positive. I think it's measured. And we've had a 4,500 price target on the S&P 500 by year-end 2023. Going into the year, we felt that way. And we just thought people would become uber negative. It's going to be just meltdown on all of these wall of worry items. Earnings are going to implode, and we're going to have a major recession. That was the story. And the way we saw it, it wasn't great, but it was middle of the road, and there was not evidence of that. So our message was, if the prior 3 years had taken you to well above your asset allocation target to stocks, cut back to neutral or normal. Don't sell down below that. Don't buy into the dip, but go back to normal and enjoy the ride that we thought would lean towards that 4,500 level.
Okay, so are you still at 4,500 for year end? So you just expect a really great start to 2024?
I do. I think that we didn't see it as swift as it was. I wouldn't have expected to be at 4,500 by now. We are. So we enjoyed the ride, and we also said to folks, don't just run to value and defense like a lot of folks were suggesting. Have that blend of growth and value, and boy, a lot of these are on sale. But yeah, I think that we're probably going to just tread water, and active selection is going to be very important if you're looking for returns in positive territory for the balance of the year in any meaningful way. But then through by 2024 mid-year, we're thinking 5,000, 4,800, 5,000 as we move into 2024.
I don't see how you get there without big tech remaining strong and maybe even getting stronger. And it's so overweight versus where it normally is. What keeps that going?
Well, you know, big tech, we're neutral on big tech. We've outperformed in a strategy so far, our most aggressive strategy, pretty handsomely by being a little underweight big tech, the Mega 8. And that's because broadly technology looks really good. Consumer discretionary also has been on fire. And
so the Russell's got to run like crazy. Is this, in effect, a bet on small and mid caps? If you're neutral on big tech, but you still think the S&P is up 12% a year from now?
No, I think it's over-advertised. It's been a narrow market. You can argue, sure, there's all kinds of statistics that can support that point. I can tell you of a number of stocks that are up 40, 50, 100% this year, and they ain't Apple.
Okay, so tell us about them. Give us a specific.
Okay.
What do you like?
So within consumer discretionary, there's just a plethora of them. You got, Tesla fits in that group, but outside of the Mega 8, you have Deckers, you have Bookings, you have Royal Caribbean. People are cruising again, for goodness sakes, and they are spending and drinking and eating and having a good time. So within consumer, there's a lot. Within tech, I'd call out Palo Alto, Synopsys.
They've got earnings coming up.
They do, and I think that as Apple and these others are looking for designing their own chips, making their own chips, Synopsys fits, right in there as a growth driver. ServiceNow.
Would you be buyers of both? Because Palo Alto's got earnings at the end of the week too.
I would.
Okay.
I would. We own them. Okay. In full disclosure, ServiceNow would fall in that category. Adobe, Arista. I mean, these are all names that are not Mega 8 that I think are positioned very well for the drive for productivity, the drive for green, cloud, all those things. They're not going away.
What do you do with financials, if anything?
So we're cautious on financials and have been. And I would argue that if you believe that the U.S. is not going to suffer a uncomfortable recession, a lot of folks then would say, well, let's go to the cyclicals, let's go to financials. I'd say be a little careful, be very selective. We under-own them a little bit. Go to industrials. There is a capital spending boom. If you want cycle, you want economically tethered growth, go to the industrials and the materials. And we love some names there.
All right.
Just
give me two real quick.
United Rental and Eaton.
Okay. Appreciate it.
Sure.
Jeff Krumpelman.
Yeah.
Great to have you.
Thanks, John.